Hi, everyone. I'm Steve Dietz, and I'm here with Greyson Geiler. We are the co-founders of Andorra Capital and co-managers of GoldRush Yield Fund. Our strategy utilizes gold and silver denominated leases and bonds designed to generate yield that is actually paid in metal. Because this is still an evolving and somewhat unique area of the market, we're putting together a series of short Q&A discussions around the questions we hear most often, from how these markets work to how a strategy like this may fit inside a diversified portfolio and why we take the long view. Feel free to leave questions in the comments below, and we'll try to work them into future discussions.
Hi, Steve.
How you doing, Grayson?
Doing well. Thanks for asking.
Um, Getting into some of the Q&As that we're hearing most these days, one of the things that keeps popping up in discussions quite often is just how our fund fits into a diversified portfolio. In both in a couple of different ways too. The first question we get a lot oftentimes is does gold belong in a portfolio, and why does it belong in a portfolio? And then number two, if I already have gold in my portfolio, does your fund replace it, complement it, or how exactly does it all work together?
I think everyone should own some gold. I'm not the only one who says that. Gold is money. Everything else is credit. If you're in a pretty tight situation and you don't have much extra and you need dollar income, you need a portfolio producing dollar income just to keep your lights on. Yeah, I don't think gold's appropriate for you. But for most everyone, gold is appropriate. Does it should people be involved in an income on their gold? Does that replace the gold portfolio? I think almost everyone that is involved with what we're doing on the cutting edge of coming back into the gold space, almost everyone started with a partial. Like the idea, I've got gold, I've always had gold. What if I got an interest rate on some of it? Test the water, get started, get going, and almost everybody continues to add to it as time goes on. Some people like to have some gold in their hands, in their safe, in their closet, in case of a super rainy day. I get that. Position in our fund doesn't have to take over someone's entire gold portfolio, but you're making a better investment. So as time goes on, it's going to make a difference.
Yeah, I always call the gold in your basement. You don't need more than what's in your bug out bag. If things get that bad and you gotta leave, you
Yeah,
can't take a bunch of gold bars with you. A
yeah.
little too heavy. But I guess one of the things that also as we look at utilizing gold in a portfolio and as we look at bringing in leases and bonds and those types of things that are earning a yield in a portfolio, um, there is the challenge with the ebbs and flows of the markets of, and while we're in the fund, do we try to time our purchases of gold and that kind of thing? And that question comes up quite a bit. And I'll let you kind of answer that, but just from a technical standpoint, it is kind of hard to just say, hey, in the middle of the month, we think gold is putting in its monthly low, and we're just going to buy it here today. So, but I'd like to hear your further thoughts on that, and I'll go down another rabbit hole after that. But I want to let you take that first.
Yeah, well, you started with the income. So let me rewind for just a second and make sure our first question at least gets addressed. From 20,000 feet, people need to understand that interest is coming back into gold. The entire world is reawakened to gold is the storage and keep safe for purchasing power. But also understand if you have a stack of gold, there are plenty of businesses that use gold in their business that'd pay you an interest rate to use yours. So there's a natural interest rate to gold and silver. And it's just now coming back into the marketplace. So let me get that part out straight out of the gate. But as far as timing the market, getting an interest rate, it's like getting dividends when you buy a stock portfolio that has a higher dividend payout, you worry a lot less about the ups and downs of the principal value of that, as long as your income's still coming in. So in general, I'm not worried about timing the market when we're buying more for our fund. We have accounting parameters that we're subject to, so we have to have a total net asset value calculated if we're buying any gold. So we typically like to do that just on a standardized last trading day of the month on the London PM gold fix. That's where we're adding gold to our portfolio. As time goes on, we've got the capacity to hedge, and we can make some statistical plays on that. For the most part, we're just trying to make sure we've got the gold and silver, and we're deploying into good risk reward opportunities to get some interest.
It kind of leads into a broader, I don't know if you call it a philosophical question or philosophical viewpoint on gold. We talk a lot internally and also with investors about trying to think in terms of ounces instead of dollars. I guess what I'm kind of curious about, you've been investing in gold for 30 years. I mean, ever since I've known you, you've been stacking ounces here and there. At what point in this process did you start to think about things in terms of ounces? Was it early on, or was it later on when you started getting a yield on it?
Only when I started getting a yield on it did I think in terms of ounces. Before that, it was always, what are my ounces worth in dollar terms? And now it doesn't, I don't think about, I hear the doomsdayers on the TV or radio or whatever. US dollars in big trouble, gold's going to $20,000 an ounce, and that goes in one ear and out the other to me now. I just think in terms of, look, we've got some great opportunities to earn ounces of interest on our gold and silver. You and I are the only two gold fund managers on the planet that don't really care in the short and medium term if gold goes higher in dollar terms. We're just going to keep accumulating more ounces. We can check the dollar value down the road, and I'm fairly confident it's going to be a lot higher.
Right. It's also interesting, speaking of the dollar, is that we're not necessarily bearish of the dollar.
All the paper currencies are built the same way. All the yen, the yuan, the ruble, the peso, they're all derivatives of the US dollar. The US dollar is going to fall apart last. It will be the last of the paper currencies standing. Can't time it. I don't know when. I could go off on a long tangent why I think there's actually some wind in the sales of the US dollar versus the other currencies around the globe. No, I'm not worried about that in the near and medium term. We're just acquiring more ounces, and it's just such a wonderful plan B. Not to go off on another tangent, but if you're an evolutionist, if you think evolution is real in any way, shape, or form, it's pretty obvious. Just over time, the durability of anything proves its worth. Well, name something that's been money for longer than gold. You can't. So from an evolutionary perspective, pretty confident gold's going to keep going. And so, what a wonderful plan B where we're now getting an interest rate on our gold.
What is there anything else that concerning gold in a portfolio that you think we need to cover at this point in time? We can certainly circle back in a future discussion and talk about the dollar and currencies at large.
I think another point I would like to make when people are talking about the dollar value of gold and thinking about it in ounces rather than dollars is this volatility has been pretty crazy. If you bought gold years ago and you watched it rocket in a year and a half through 3,000, 4,000, 5,000, And man, then it settles back into the low fours. That's a big volatile move, a big down move. You saw a lot of red from your high print. You're thinking, wow, why didn't I sell some over 5? But the other side of you always wants to own gold, because what if it goes to $10,000 an ounce in a couple of years? So that anxiety, when you're consistently getting an interest rate, you've got your gold deployed to a viable investment and you're getting more ounces, that volatility doesn't strike you the same way. If you want to keep a futures contract or a paper gold contract and time the market with buys and sells and that kind of stuff, that's great. I'm not throwing shade on that at all. That's just not what we're doing. We're deploying to viable and profitable businesses. This is a renaissance in gold. It's a micro monetary system that actually exists, and it's expanding exponentially. That's helping a lot on the basics of constructing, including gold, in constructing a portfolio. So I'm gonna let it go there. Everyone, please add questions if you have them in the comments below.
All right, Grayson, thanks for that. I think that wraps up nicely, kind of a high-end snapshot view of how to philosophically look at gold and specifically our fund and how it fits in a portfolio. And please, everybody, if you have more questions that you want us to dive deeper into on this topic, please post them in the comments below or anything else. We'll be happy to address those in later discussions. So with that, we'll wrap it up and see you next time.